lot of my friends got into mining for shits and giggles. Just a few days ago, a friend of mine told me that because of these shits and giggles, he's now paying off his mortgage and renovating his house.
I found Kaspa maybe 3 months after launch.
We said that things will come from the community, and things did come from the community. Everything you see in Kaspa, even when it dumps, it never dumps to 2% of all-time high or 3%, but to 30-40% in the worst dumps we've had, is because we have a very strong base of wealthy holders. Even if their initial investment was like $500, they are now sitting on something valuable.
But also, it's very interesting that Kaspa's blocks in a single day has more than all of Bitcoin since inception.
Yeah.
But what does adoption look like for Kaspa?
KRC20 is not the adoption. It's an adoption. It's one cool thing that you can do over Kaspa that people are currently doing. I'm not even going to go into the stuff that currently happens in closed rooms, but big things are coming to Kaspa, and it's amazing.
Hi, and welcome to the Andy and Friends podcast. I'm your friend Andy, and in this episode, I talked to Shai Wyborski from Kaspa. This was a really interesting discussion because he breaks down a whole bunch of technical stuff and questions that I have for him about how Kaspa works. We talk about everything from solving the trilemma in crypto to thoughts on all this hash rate that's come online with Kaspa Mining, and even having Kaspa be so ASIC friendly in the first place. He also talks to me about when most of the Kaspa has been mined. What happens then? How do miners continue to make money? And there's also a really interesting part of this discussion where we talk more broadly about what does adoption look like for Kaspa? What would be metrics for success there? What are the short-term wins and what are the long-term wins? So if you're somebody who has heard of Kaspa and is interested in it and want to learn a whole bunch more, well, then this episode breaks all that stuff down and even more than that. And I found it really, really fascinating. So let's jump into it. And here we are on the podcast with Shai Wyborski. Welcome to the podcast.
Thank you. Thank you for pronouncing my name correctly.
we did do some rehearsal beforehand. I want to make sure I got it right. You are one of the co-authors of the DAG paper.
The Ghost DAG paper.
Ghost DAG paper, sorry. And you're one of like 6 or 7 core developers / researchers for Kaspa. Is that correct?
It's hard to count. I would say that I am part of the several people who originated the thing. We started to work on it before testnet and mainnet, maturing it from just an idea, a very good and very fleshed out idea, into something that works, an existing system.
Got it. And funny enough, maybe 2 hours before you showed up here to record this, another one of my Kaspa miners just went online. I just got another one online, so I'm getting some more Kaspa as we speak. And I don't know, maybe it's because this is happening. The markets are like green all of a sudden. Kaspa's up like 6% today, so that was kind of I don't know, serendipitous, maybe. So let's start with Kaspa. If you could, for those who don't know, just briefly tell everybody what is Kaspa.
Kaspa is a layer 1 proof of work, which is I'd say the forefront of how we do proof of work. It's essentially taking the core idea of Bitcoin, a lot of core ideas of Bitcoin, first of the mathematical idea of this new notion of consensus, of proof of work consensus, and the ideological grassroots idea of a community-driven project, create some new thing. Like, I think of it sometimes as a precious metal that you can send over the internet and let it run free. It doesn't belong to anyone. Nobody controls it, and nobody controls its development, and nobody controls its future. And it's just there for people to do whatever they will with it. And on the technological side, it's groundbreaking in many levels. We work very hard to find novel solutions to many of the problems that were obstructing the entire proof of work market from progressing. I'd say even the entire crypto market. And I think we came up with a technology and a community that are stronger than anything we've seen in quite a long while. And I think the best way to explain what Kaspa is actually to show it. very quickly, if I may. I know there are some videos, but let's do it live for now. I'm just gonna send you one Kaspa. You have Caspium on your phone?
I have my Kaspa in Zelcore.
Send me an address.
Okay.
Can you QR me an address?
Let's see here.
Okay. So don't blink or you'll miss it.
Oh, well, there, yep. Kaspa transaction received on my income wallet in Zelcore. And yep, one Kaspa worth 16 cents today.
Yeah, and the Zelcore, I think it waits for 10 confirmations. That's why it took too long.
Zelcore maybe is not the best example of this, but that's still very fast.
For 10 confirmations? That's amazing.
Yes. I mean, if you're used to Bitcoin blocks, 10 minutes on average, sometimes an hour, sometimes 2 minutes. You can't either way. But yeah. And one thing you said as you're introducing Kaspa is talking about the community and how the community is kind of something special, and it's kind of this very passionate and excited aspect of Kaspa. I tweeted that I was going to be doing this podcast, and that tweet, after like an hour or two, 300 likes, I don't know how many questions, 100 different questions. So I have thrown a couple questions in here, but I think that the community element is it's either overhyped or it's overlooked. How do you view like community when it comes to building something like Kaspa?
I think in something like Kaspa, the community is the most important thing, because Kaspa is nothing without its community. When we launched, there was so much things to do. Like the coin launched, we had nothing. We didn't have a block explorer. We didn't have a wallet except a CLI wallet, which was very hard to use and required syncing a node or being able to hack it to use another node. And we didn't have a website. Of course, we weren't listed anywhere. Nothing. We just have a bunch of passionate people who put this thing online, the mainnet, and let it start running, and did whatever they needed to do. And we said that things will come from the community, and things did come from the community. Everything you see in Kaspa, in the community, I also include the original contributors because they stayed as part of the community. They aren't the company DAG that facilitated the original development hasn't been functional for years. It doesn't pay them paychecks, and the community around this coin gave it value, and the value was used to support further development, because people who are into this coin, and even if their initial investment was like $500, they are now sitting on something valuable, and we have a huge spread of wealthy community members that hold the coin strong. And that's why I think I don't talk much about price, but I think that the reason that you see that even when it dumps, it never dumps to 2% of all-time high or 3%, but to 30-40% in the worst dumps we've had, is because we have a very strong base of wealthy holders who keep things afloat. And all of the development you see right now, all of the big things going around to this Kaspa World Tour, or development Rust and DAGKNIGHT and the KRC20 and the Kaspa Ecosystem Foundation and the Community Marketing Fund and the Community Development Fund, and all of these things that were, each of them was created by a different person or group of interest. And this is, I think, how it should be. It decentralizes everything. There is so much going on that me and the original contributors are aware of. We discuss with each other. We're all friends in the same community. We help each other. The original contributors currently obviously have the deepest technical knowledge. So we help other people understand, and we teach and we guide all sorts of development and ventures. But there are so many independent entities, even entities that are in competition against each other, that have all these large initiatives, and I think this is exactly how it should be. It is a decentralized and competitive market, the Kaspa market, and it's an amazing thing to behold because we didn't know if it will ever happen when we launched. We almost didn't launch. And we were on the brink of, at some point, the development budget was about to end, and Jonathan didn't want to go and raise more funds. So he decided to pull the plug on the project and move on. And then Gadi Glickberg told him, no, take what you have and launch it, and we'll see how it goes. And this is, and now we are here today, so it's kind of amazing. And all of this happened thanks to a strong, devout community of people who believed in the project. And I think the reason we could raise such a community is because we really did something meaningful technologically. I think it's because when they approached us, they saw how candid and open we are, and how open we are about the stuff that has to be done, and about the faults, and about where we need help. And this not only gave people a sense of belonging, but it also helped to build a lot of trust. And this trust now go on because there is a huge community of many entities and members that are independent of each other. They are competitive with each other, but they trust each other. I think this is amazing.
Yeah, I've been very impressed with the vigor of the Kaspa community, which I knew there was already a strong community, but I've kind of witnessed firsthand just as I've chatted with you, since I've chatted with you and stuff. And yeah, Kaspa is interesting. I found the launch is interesting, especially what you're talking about, because I found Kaspa maybe 3 months after launch on the Bitcoin Talk altcoin announcement forum. Just a real rough posting.
Yeah, it was I'm very defensive of our work. I'm in general a person who is very defensive about things they care about. And here it's not just our work, it's also my friends, because Jonathan and Michael and Ori and Elichai and Mike and all of the initial circle are all very good friends of mine. And when I see people call them scammers and shitcoiners and money grabbers, I take it personally. I mean, if people say that the project is bad, I can disagree with it academically, and I can say that they are conversing in bad faith. But once I see accusations throws around, then I take it personally. Maybe I shouldn't, but I do. So this thread, the original Bitcoin thread, is kind of rough. I was also very inexperienced. Right now, I'm starting to get used to the exposure that the success of Kaspa brings me. But at this point, I was just this grad student, and suddenly some people I don't know start shitting on my work. So it became like a bit childish, a bit low, but you grow and you learn.
Yeah, well, I mean, I look at this, and I mean, you have a very different point of view because you were there from the beginning and you're launching this thing. I view it as someone who's looked at all these different crypto projects. I'm looking for different things that I could potentially mine and which ones have potential. And Kaspa caught my eye from the beginning, even with that admittedly rough, first posting on Bitcoin Talk. But I saw something, I was like, this is interesting. This is I didn't really understand all the technology at the time. I'm still trying to grasp it today. But it was interesting to me because just like in the GhostDAG paper that you co-authored, where you reference the Nakamoto consensus and you reference Bitcoin, it's not a perfect analogy here because we don't know who Satoshi is or was or whatever, vanished from the face of the earth for all we know. But Kaspa was kind of released out into the world, a fair launch, and then people kind of did what they wanted, with it after that point and got to where it is today. And I imagine, and maybe I'm wrong on this, but I imagine from when you first launched it to where it is today, you didn't picture it perfectly from seeing this entire thing to where it is today.
If you see my original posts, like the day it launched, I wanted as many people to be involved in mining it, just because it was, I'd say, for fun. And if you'd see my original Facebook post about it, which I wrote to my friends, I was like, Hey guys, if you are ever interested in mining and want to try it for yourself, here is a fun way to do it. And who knows, maybe someday it will even be valuable. And a lot of my friends got into mining for shits and giggles. And now, just a few days ago, a friend of mine told me that because of these shits and giggles, he's now paying off his mortgage and renovating his house. So it's it's incredible to see. No, I don't think even people who are more optimistic than me, if you told us that in less than 3 years you'd be top 25, you'd be in panels and giving keynotes all over the world, and I'm not even going to go into the stuff that currently happens in closed rooms, but big things are coming to Kaspa, and it's amazing. It's amazing to see the amount of traction and trust and confidence that we get uh, from everywhere, within and without within and from outside the crypto industry.
Yeah, it's super cool. I'm really excited for the success that y'all have seen so far. So, how do if it was fair launch, and a lot of people who are involved in it aren't getting paid, it's just self interest, I guess. How did you were you mining from the beginning? Did you have to buy in like everybody else? Like, how did you get? I assume you have Kaspa, so like, how did you actually get some?
Yeah, so Kaspa was fair launched, but we did mine it as the company DAG Labs. It mined Kaspa after it launched on fair terms. We had some budget for it, and when the company shut down and we decided to fair launch, or Jonathan decided to fair launch, and then the agreement was that we will mine as much as we can. And here I say we, but it was essentially me. I ran all the mining operation, and half of it went to the investors, which were mostly Polychain, and the other half was distributed between the originators. So I personally got 3.9 million Kaspa from DAG Labs, and I'm stating the exact number because it's important to me that everybody know exactly how much we got as a collective. I personally got, so they will get some sense of the distribution from from this initial mining, which wasn't pre-mining. It was completely competitive. It was much more competitive than we expected. I was with my finger on the pulse all the time, and I was every morning I would wake up and I would see the hash rate spike, and I was like, "Oh shit, we had a goal and we didn't meet it." And it wasn't that high. We thought that 5% of competitively mining would be fair, and we only managed to get about 3.5, a little below 3.5. And not all of this money stayed. Some of this money went to fund some more development. And other than that, I mined myself. And I mined some, and I bought some. Now, this is already my personal finances. So I'm not gonna say explicit amounts, but I will say that it's not that much. Like, if I decide right now to dump all of my Kaspa, it wouldn't cause a meaningful drop in the price. I'll say that.
Yeah, that's the thing that people worry about with this type of stuff, but I think that is that is a fascinating angle for this one. That even early starters of it, contributors, people who are there from the early days. You had. If you were getting in as a miner, just not related to Kaspa whatsoever, you'd have every much as chance to get as much as you had from the beginning. Because I know people who are just miners.
I know of a lot of people, a lot of people who have more Kaspa than me.
Yeah. Are you still mining Kaspa now?
No, I mined in the CPU and a little bit GPU, and that's it. Like, I haven't been. I think I've been mining during the first 3 months, and that's it.
What, given the past year and how much this is accelerated, Bitmain, really, Ice River, these ASIC manufacturers have started. What do you think about that development? over the past year, just the hash rate growing and all the stuff. Is it a net positive? Is this going the direction you wanted it to go?
Definitely. We expected this. We purposefully used ASIC-friendly mining algo. I think I talk about it in my keynote today. It's not hard to find this keynote. It's the fourth time I'm giving this keynote. Though it was funny. Today they were running ahead of schedule. So
they're almost
yes,
usually behind schedule.
Yeah. So they told me that if I want to go beyond my time frame, then I am allowed to. And the time frame is usually 15 minutes anyway. And they gave me 20 minutes and they told me, so I asked, okay, so would you like me to go 25 minutes? And they said, yeah, sure, that would be great. They wanted it to return back to the schedule. So I think the version I gave today is possibly the most comprehensive one. And it was recorded, it would be uploaded. And what I talked about there is that ASIC mining, ASIC friendliness, and having the most ASIC friendly algorithm you can have is crucial for decentralized mining. Now, people usually hear this.
Hear the opposite.
And they think the opposite.
Yeah.
But here is the thing. Designated hardware always wins. Always wins. And then people, they say, okay, but what about this coin? It's existed for 10 years, but there is no designated hardware and the GPU or CPU miners are still competitive la mining. I'm saying, okay, if adoption comes and this coin represents a market of, I don't know, $100 billion, $200 billion, not to talk about $1 trillion, then the designated hardware will follow along. Because you use ASIC resistance, then the result is that it's harder to create designated hardware. But if your market is strong enough, then it will appear. We've seen it, for example, in Litecoin. They used the script, I think. And it was initially supposed to provide ASIC resistance, but right now GPUs cannot compete with Litecoin ASICs. And this is the end game for any highly adopted proof of work. And once the designated driver hardware wins, then if your algorithm is ASIC resistant, it means that even though you are mining with ASICs, the ASICs are very expensive. They die quickly and they require a lot of energy. They make a lot of noise. They make a lot of heat because they have to muscle through the resistances that you put up. So you lose on both ends. On one hand, your mining is still requires designated hardware. So it's not open to anyone with generic hardware like GPUs or CPUs. But on the other hand, maintaining this hardware becomes much, much more expensive and much harder than if you had an ASIC-friendly algo. And ironically, the ASIC friendliness is one thing that actually drew in a lot of GPU miners. Because ASIC friendliness is also GPU miner friendliness. And GPU miners started to mine Kaspa, and they realized that they mine at the top of the ability of their GPUs, but the GPUs don't get as warm, and they don't burn out as much, and they don't require as much energy, and they don't produce as much heat. And this is one of the reasons they loved Kaspa, because if you factor that in, then mining Kaspa becomes even more profitable, because you pay less for electricity and you have to replace your cards less often. So in a sense, the ASIC friendliness is also something that drew in a lot of GPU miners. Now, the concern about ASIC mining, there are actually two concerns. One is that it causes most of the coin to be concentrated at the ASIC manufacturers. And for that, we have rapid emission. We made sure that by the time ASICs appear, then most of the coin is already in circulation. And the other concern is that after ASICs appears, it becomes an industrial market. But here, the high blocks per second, the high block rate comes into play, because more blocks means that more people can share the daily or weekly emission or fees. So if Bitcoin produces 144 blocks per day, it means that you can have at most 144 entities, be it solo miners or pools, that see daily rewards, daily profits. And in Kaspa and 10 VPS, you have 864,000 blocks per day, which means that you could have up to 864,000 solo miners or pools that can see a daily income. And that's why we see that Kaspa kind of puts the home miner back on the map, even though you can get KS5s, which obviously gives you the best bang for your buck and bang for your watts. People are still highly interested in the small KS0s, and this is unprecedented, because in any other tech, you see that once the large miners, a new miner comes that gives you a better trade-off, then all of the previous miners become obsolete. Because if you can afford miners, then why not buy the largest miner and get the best value?
Yeah, it's interesting. Yeah, there's the raging debate of ASICs versus GPUs and resistance and stuff, and I've fallen on both sides of the argument. But it seems like just from a scalability standpoint, GPUs are kind of a non-starter. To say globally everyone has got to run as many, because they're just harder to run at scale than ASICs. And ASICs, if you want that security, you want that extra hash rate, and you want that adoption, in that terms, that's the way to do it. But also, it's very interesting that Kaspa's blocks in a single day has more than all of Bitcoin since inception.
Yeah. And another thing is that GPU miners are not committed to your network.
Yeah.
Because they have generic hardware. If some coin even a very small coin, becomes profitable, they will hop to it. And once many miners hop to it, and so it becomes unprofitable to mine, they will hop again. They don't give you stability of hash rate, and stability of hash rate is very important for the security of a proof of work, especially a high responsive proof of work like Kaspa.
And on the topic, and I want to go to some other technical points here, but on the topic of mining, what does the timeline look like when Kaspa is no longer mineable? And I know in other talks you've talked about how that once it's no longer mineable, there's more than just the fees to subsidize miners. Can you talk me through that a little bit?
Yeah, so I wouldn't say no longer mineable. It will still be mineable. It just there are no longer block rewards.
Right.
So here you ask, what is going to incentivize miner to mine? So right now, miners are incentivized to mine by a direct subsidy. Mine our coin and you will get some coin.
Right.
And this is a crutch. It serves two purposes. One purpose is to spread the coin, but the other one is to be a crutch, is to buy a security budget by printing money. You can't print money indefinitely. You can. I mean, there are hyperinflationary coins whose emission is infinite. But we don't believe in this, because if we take the rare metal, the digital silver analogy, for example, you need scarcity.
Yep.
Scarcity is important if you want to be a commodity. And we need to find ways to incentivize users to fund the security at some point. And every proof of work has to do it. At least every deflationary proof of work, every proof of work with a limited finite supply. And just drawing out the emission, or adding tail emission, or recycling emission, it just says that we are going to leave this problem to future generations. Now, the solution to this problem is adoption. And usually when people hear adoption, they hear fees. Now, from the stuff that I'm working on right now, that the discussions I have with all sorts of entities that want to use Kaspa and want to use crypto and think that they've waited for a thing like something like Kaspa to come along because everything before didn't suit their needs, then I get that they want to contribute to the security budget directly, not in the form of fees, just in the form of we want to take a market, an existing market of something like cars or energy or collectible cards or whatever, and we want to place it on the Kaspa network, then we need the Kaspa network to be secure. If the Kaspa network is insecure, then our product is compromised. But our product is not a transactional service that we collect fees for. It's something else. So this gives them incentive to pay for the security, to pay to enhance the security using other means than fees. Other than that, even if you talk just about fees, the Kaspa or DAGs in general, actually this is something very general to DAGs, and they have a very unique dynamics of how the fee markets behave. Because a lot of the problems of fee markets, they're actually not problems of fee markets in general, they are problems of fee markets in chains. Now, I won't get into the math. It's cool math. I wrote a Medium post about it, which I think is it's pretty approachable. It's called, I think it's called something like how parallelism impacts transaction throughputs or something like that. It talks about, do you really extend the throughput if you do a DAG? Because what if all blocks contain the same transactions that you really didn't achieve anything? So the great insight here is that miners that want to increase their, to maximize their profit, you would think that the rational thing for them to do is to take the transactions with the highest fees. But that's not true. Because if all miners take transactions with the highest fees, then except one, all of them will lose all of the fees. So they are actually incentivized to randomize the way they choose fees in a way that minimizes transaction collision. And this has far-reaching effects. I can't explain how far-reaching the effects, but two effects that I like to discuss is one, that the fee market becomes active when the network is very far from being congested, unlike in Bitcoin. And the second is that it has a better dynamic of how you set how much fee you're gonna pay. Because in Bitcoin, there is a cutoff, a deterministic cutoff. Think about the least paying transaction, which is about to be included in the next block. If your fee is 1 Satoshi below this transaction, you're not going to be in the next block. If your fee is 1 Satoshi above this transaction, then you will be included in the next block. So a change of 2 Satoshis change your probability to be included from 0 to 1. And in the world of transaction selection games, of parallelism, because of the randomness, you get a completely different dynamic. The more fee you pay, the less time you will have to wait for your first inclusion. If you pay a tiny fee, you will wait a lot of time, but you will be included eventually. And if you pay a large fee, you will be included very, very fast. So, in a sense, and I have this theory that you can actually write a mathematical model, an economical model, which makes sense and is intuitive, and actually prove this in this model. This is a research product for anyone who wants to take it. That in the infinitely many tiny blocks limit, you would see that the amount of fees a user pays represents exactly the quality of service they want to get, which is completely different than this race to the bottom bidding war dynamic you see on Bitcoin. And I think this in itself would prove itself very, very useful for a better security budget and a better fee market.
So you talked about adoption, and I know there's a lot of excitement, especially from the Caspa community around KRC20s and that coming in the future. But you've also said before that that KRC20 is not adoption. And maybe it's a part of the adoption, but what does adoption look like for Caspa?
Of course, KRC20 is adoption. Anything that people do on the chain is adoption. KRC20 is not the adoption.
Mm.
It's an adoption. It's one cool thing that you can do over Kaspa that people are currently doing. It's developed by Casplex. It's the first project to be founded by KEF, the Kaspa Ecosystem Foundation. And it definitely is adoption. They take the chain and they adopt it to do something cool, to do meme coins, to do in the future NFTs and DEXs, stable coins. You can do a lot of stuff with it that you couldn't do before. And now for this to actually happen, people also need to adopt KRC20. And for now, the only plans I see are meme coins. And I think now I don't want to commit to anything because I am not a part of this. But I've seen talks about DEXs, which would be very cool to have DEX in Caspa. For the first time, you will see a DEX on a proof of work that you click the trade button and it actually trades it right away. So something like that would be amazing, and it's just around the corner, actually.
So yeah, and I see what you're saying. Yeah, it is adoption, but it's one piece of it. But more broadly, like bigger picture, what needs to happen for you to say, okay, Caspa's on the right path to adoption from a big, like, worldwide, global sense? Is it just lots and lots of things being built on it? Is it DeFi-like elements like that? What is it?
Yeah, it's both those things. I would like to see markets, all sorts of global markets that currently lack a proper trading platform to decide to go the crypto route and use Kaspa to tokenize and trade and facilitate their trades. I think because Kaspa is really so capacious, then you could even see private adoption in the sense that, I don't know, you have like this real estate mogul who has a huge portfolio. They could use Kaspa just to tokenize their own portfolio for their internal use. There are so much things you can do, and smart contracts will appear, I believe, not too long from now. And you can do everything that you can do on any other chain, you could do on Kaspa. That's the point, because it's a layer one. It's an extremely robust, extremely strong layer one. And adoption would just be to come and use it more and more and more. And I do think it's on the right trajectory.
So you've mentioned it now once or twice. Kaspa, like silver, it needs to be scarce. It's like almost like a precious metal. We've heard for a long time, and I subscribe to the idea that Bitcoin is like a digital gold. It's better than gold, maybe, in a lot of different ways. Do you see Kaspa analogous to that? Do you see it as replacement to that? Why Kaspa silver?
So I think I kind of grew out of this narrative that Kaspa is digital silver, or that its purpose is to be digital silver. Because if you take the Bitcoin is gold analogy, then it's very clear why I would call Kaspa silver, because it's much more abundant and it's much easier to use. So, in old days you would keep the gold beneath your floorboards and go with the silver to the market to do shopping. So this is how I thought about it for a long time. But I realized that this is kind of limiting. It is kind of even a bit defeatist. It's like saying, yeah, Kaspa is a transactional layer. It's what we do. But it's not. Kaspa can do anything and everything, because you can do all of this at the same time. So I like the idea that Kaspa could be used as digital silver, though thinking that any layer one could sustain the entire economy of the world or something of this order of magnitude is kind of naive. because people like to compare to Visa, but the entire economy of the world is not just Visa. And I think most, like, I don't know how much, but pretty much a lot of transactions these days still happens in barter and in cash. So holding all of this on a layer one is not realistic and is not necessary. You could do layer two for microtransactions. You could do a lot of things, but the point is that there is still this thing that is called Kaspa, that it has value and you can transmit it really, really fast. No matter what you represent with it, it's extremely useful.
So there's this other, now since we're talking about a little bit about like Bitcoin here and then in Kaspa, talking about, and then we've also talked about adoption. Bitcoin is 14, 15 years old at this point. On one hand, you can view it as Bitcoin is a little over $1 trillion in total market cap. And that's teeny tiny in the global scale. And maybe that's not that impressive after 15 years. On the other hand, though, the internet was conceived in the 1960s. In the 1980s, it only had a few thousand users, and multiple decades later, and it's only now it's changed our lives. So I totally see on one hand, it's there's not much happening, but on the other hand, sometimes these technologies just take a really long time to shift paradigms. So how do you think about that with Kaspa, but also crypto in general?
Yeah, well, I have a lot of things to say about it.
Very good.
First of all, the internet changed our lives from day one. We just didn't see it directly. It was initially used by governments, by universities. It became an indispensable tool for intelligence and for research, and it created improvements in the way we do things at a level that is not directly visible to the everyday people, but it was very important from the start. It wasn't just we built the internet, it's cool, maybe someday we'll use it, and then 30 years later, Google found an application for the internet that was just lying dormant and waiting for adoption. It was adopted from the first second, and the internet is something that can evolve and extend and changed and be layered, and even the basic protocol, the IPv4, it has been modified and it has been updated. So I don't think it's a good analogy. Another reason I don't think it's a good analogy is because people tend to forget that as time goes on, adoption for anything becomes faster. Now, it's a bit circular to reason about it because the internet is essentially the reason for that. But, for example, Kaspa took about a year to reach similar adoption to what took Bitcoin in 10 years, in the sense of ASIC miners coming in. Does it mean that Kaspa did it faster? No. It means that Kaspa was conceived in a reality where adoption is faster by nature. So if you just look at the time, just T2 minus T1 like this, of how long since before the internet was created and until you'd see it as a household thing, and you compare it to Bitcoin, I don't think it's a correct comparison, because in the 20,000s, technologies are by nature adopted much faster. Like, it took the microwave a lot more years to get into every household than it took the flat screen TV, just because humanity was in a different place and in a different disposition when it comes to adopting technology.
I think that still at this point, a lot of people are still not familiar with the idea of a DAG. We think blockchain, everything in a row, kind of a linear kind of chain, kind of visualization in our heads. DAG gets a little bit crazier because you have all these things happening all at once. Can you explain as simply as you can what that is and how you utilize it?
I'll make it very simple for you. If you allow any block to just point at another block, it's a blockchain. If you allow a block to point at several blocks, it's a block DAG. That's it. That's all the difference. A block DAG in itself is not a solution. It's a problem. Like, the problem is, how do you resolve inconsistencies? How do you take a double spend, for example, and make sure that that everyone agrees on which side of the conflict is the correct side? So in a blockchain, the way you do it is that you find some rule to isolate a chain and say this is the correct chain, and if you choose the rule correctly, then you need a majority to change from one chain to the other after some time has passed. There are two famous rules for do that. One is Bitcoin's the heaviest chain rule, and the other is Jonathan's ghost rule. And in DAG, what we do is an ordering. We take this bunch of blocks that are in a blob. There are blocks that are parallel to each other, and then we find some way to arbitrarily choose which one of them was before the after, and we turn this blob into a chain. And we also need to do this in a way that someone who intervenes from the side can't make nodes disagree about the ordering or change the ordering retroactively later. And this is something that is very hard to do. But in essence, the problem itself is clear. Now, the reason that it's hard to do is actually kind of subtle. In blockchains, every block can point just at one block. So if a block points at an old block, then it will almost certainly never be a part of the heaviest chain because it has a disadvantage. In DAGs, you can point at the newest blocks, but also at an old block, and you can use this ability to create a lot of havoc and mayhem and really disrupt the system. So you need to find a rule that overrides this. And this turns out to be very difficult. And finding a correct way to do it and proving that this way actually works, there have been several attempts. Some of the attempts took the way of the compromise. They say we can't do this for an unstructured DAG, so we are gonna do some structure which is more general than a chain, but still very limited. Parallel chains is like the prominent example of that. You have protocols like Prism or Chainweb or Quai or Blockflow. They are interesting, but they are still limited by the fact that they impose a structure. And then you had attempts to do an unstructured DAG or a DAG which has very little structure. You had protocols like Tangle and Conflux, and they ran into other difficulties in terms of what's called a liveness attack. So they could make it so you can't revert an attack, but you could still delay the resolution of a conflict indefinitely in some of them, and in other not indefinitely, but for a long time. And GhostDAG was essentially the first one to figure out how you can use a completely structureless DAG, but still make sure that everything converges very fast. And you essentially, every layer above the consensus layer doesn't even care that it's used to be a DAG. It just gets a chain and it knows that change is not going to change. So this, for example, the reason why I keep arguing that doing smart contracts on GhostDAG or on DAGs is not really that of a problem, because the layer that evaluates and executes the smart contracts, it gets a chain. It doesn't even care that this chain used to be a DAG. It's just a chain. So you can do it as you would do on any other chain. And this, I think, the DAG problem can be stated in a very clear way. Get a DAG, turn it into a chain in a way which is secure. Without going into what secure means, use your imagination. It's not that, it might be a bit more precise, but it's not that far than what you would guess it means. And GhostDAG is the first solution I've seen that actually works without making any compromises.
And what is DAGKNIGHT?
Okay, this is a cool one. We say about Kaspa and also about a lot of other projects, though most of them are a proof of stake, that you get instant confirmations. And instant confirmations is just a way of saying confirming as fast as the internet allows. Because if it takes the network 10 seconds to find out of the next block, then you're not going to get confirmations in 5 seconds, right? It's ridiculous to say that the entire network agrees in consensus about a transaction that half of it doesn't know about yet. So it essentially means instant confirmation. It means that you can confirm as fast as the internet, and as the internet goes faster, you could confirm faster. But the thing is that you don't really quite go as fast as the internet, because you have to parameterize, you have to choose, you have to measure and fix what you call the speed of the internet, the latency of the internet, to be more exact, and you have to assume that the network will never deteriorate to a state such that it has greater latency. And you can't do it without taking a margin of error. So if you measure the network to work to have like a latency of 2 seconds, then you would assume a latency of 10 seconds. Because if you fix it to 2 seconds and it goes to 3 seconds, then the security of your of protocol just goes out the window, because you would produce too many orphans. And this is why, for example, in GhostDAG, we say that you can have up to 5% of red blocks. But if you look in the KGA, in the Kaspa Graph Inspector, you would see that red blocks are much, much rarer than that. You get maybe 0.05% of red blocks. Why is that? Because we have to take this margin of error. Even though we can endure 5% red blocks, we operate in a parameterization that creates much, much less red blocks, because we want our protocol not to go beyond the 5%, even if there is a deterioration. So the bottom line of all this technical discussion is that you have to run in a suboptimal speed, because you need this margin of error, and it's meaningful. It can make your confirmation times 5 times faster, 5 times slower. Now, the other side of this thing is that if the conditions of the internet improve, the networks becomes faster, then your protocol will not improve with it. It will still be bound by the parameter that you set. And now, Michael Sutton came up with the observation that it doesn't have to be this way. You can just have each node of the network decide what it considers to be the current latency in some way, and you can create a protocol that takes all of these allegedly conflicting points of view and still build from them a cohesive consensus. So then protocol can adapt to the network conditions by just looking at what nodes consider to be the correct confidence for now. And this essentially means that the network can automatically scale itself. It can upscale itself when the network conditions improve, and it can downscale itself when they deteriorate. So you get this self-scaling, you get that you run at optimal speed. When the optimal speed increases, you will increase with it. And if there is some problem with the network, then it could temporarily decrease and increase back again. Now, there is a very interesting point in it. The thing is this. In mathematical models that describe distributed computation, we usually assume that there is a condition, like a deterministic condition, for when one of the entities decided that something is finalized. In the world of blockchain, they call it deterministic finality. And the way that Sutton and Sompolinsky were able to create this DAGKNIGHT protocol is by noting that there is no such thing as deterministic finality in proof of work. This is already known. There is no point in time that you can say this transaction will definitely never get reorged, or never get double spent. You can just say that after you wait 6 blocks, the probability for that is so small that you can neglect it. Now, some people are frightened by that, and then I tell them, you actually do it all the time. You have your ATM card, right? If someone steals your ATM card, there is no 100% guarantees that he's not gonna guess your PIN code, right? It just very, very low probability, low enough that you'll say, this scenario is improbable enough that I can disregard it. He had 3 tries to guess one of 10,000. So, and again, if you create a Bitcoin wallet, then there is some probability that someone could just guess your seed phrase, right? It's not 0, it's just very small. So that's how it works in confirmations, in proof of work. It's just the probability is never 0 for a reorg, it just goes down really, really, really fast. But all the models that we use to analyze distributed systems assume this deterministic finality, and the proof that DAGKNIGHT actually does this self-scaling actually relies on the fact that each node can choose its own confidence, and that finality is not deterministic but probabilistic, and every node is entitled to choose their confidence. And if we see that a lot of nodes choose a very low K, they assume that the network is in very good condition, then this can increase the confidence. And we can't prove this right now, but there is a conjecture that this is only possible in this probabilistic finality models. Now, what I said is a very deep mathematical statement, right? It's a bit hard to follow. Like I said it in the academic gibberish. I said we use a special part or special model that encompasses probabilistic finality, and we conjecture that blah, 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 impossible here and there. So let me spell out a consequence of this conjecture, if this conjecture is true, that anyone can understand. If this conjecture is true, it means that not only that DAGKNIGHT provides confirmation times which are as good as any proof of stake, but it provides better confirmation times than proof of stake theoretically can ever provide. It's faster than the theoretical fastest possible way a proof of stake could work.
So in that system with the nodes determining their own level of confidence, how is that moderated, and what could go wrong in that scenario, and how is that remedied?
So if you think about it, all proof of work already works this way, right? I send you a Bitcoin, and
which I gladly accept.
Yeah, and you decide if you consider the transaction finalized after 3 blocks or 4 blocks or 6 blocks.
Yep.
That's it. That's all I'm talking about when I'm saying each node chooses its own confidence. The thing is that these choices of confidence, how do I say it? It's very complicated how this whole thing works under the hood. But the thing is that in Bitcoin, if the network really, really improves, then everyone can say, okay, now we go for just 1 block, okay, and it will be fine. But the protocol will not adjust itself to that. In DAGKNIGHT, there is sort of this responsiveness between the choices that nodes make. That because you see how different nodes color, and from that it affects the convergence of the consensus. These are really details I don't want to go into, but there is no governance. It's still completely decentralized, and each node should only see its point of view and only hear of all the blocks, and the responsiveness is just works.
And if every node across the entire network decides that it's acceptable for a single block confirmation or something like that, is there what happens in that scenario?
Well, if every node that undershoots, that thinks that the network is much faster than it actually is, then this node would confirm transactions and consider transactions to be confirmed when they shouldn't have, and it would consider a transaction to have 99% security against a 40% attacker, where in reality it has 20% security against a 10% attacker or something like that. But it would only affect this node. It would not disrupt the entire network.
And one thing that's pretty cool about node operators that you've talked about is so you can, Raspberry Pi or something like that, $100 hardware, you can run a node. Is the incentive to run a node and to be supporting the network in that capacity just I have Kaspa, I want to be a part of the network, I want it's altruistic? Is there some other incentives built in to why you'd want to run the nodes to operate the network?
Well, a lot of services that you would like to run would require their own node. Think about it. Every exchange has to run several nodes. They don't want to rely on external nodes. And they want to have several nodes because they want to avoid the scenario where a node would be eclipsed. Right? You have a wallet. For the same reason, you would like to create some nodes. And yeah, a lot of people just like to create nodes for their own fun and amusement. But nodes are just useful. People want to track the data for science. People want to track the data because they are mining and they want to mine to their own nodes and not to a pool. There are many things you can do with a node. And also there is the altruistic thing. It's just, it doesn't require a lot of effort. And for some people, it's like a fun DIY project. Let's run a node. Why not? But I think just because it's so cheap to run a node, and if you have a lot of nodes, then they are distributed around the world, and it is more secure for you, because it would be much harder to do an Eclipse attack. Then that in itself is an incentive to run many nodes.
So I have a million other questions stuff, but I'll wrap this up with one last kind of the last bigger questions, I guess, and you can choose however you want to answer this. But Kaspa is a few years old at this point. Still in its infancy in many ways. I mean, the whole industry is in its infancy in a lot of ways. But over the next 5 years or so, what has you the most excited about Kaspa? What's coming on the pipeline that you're the most excited to see built out, or just what's kind of your vision for the next few years?
So at this point, I learned not to have a vision because I'm constantly surprised. What excites me about 5 years is to see what's going to happen, because anything could happen. I would love to see smart contracts on the network. I would love to see Kaspa pulling in industrial players that are not from the world of crypto, to get real adoption, to get people who said, hey, remember the thing we tried to do in 2016, but it didn't work because crypto wasn't mature enough? Then there is this new player called Kaspa that might give us what we need. And hopefully we'll see a lot of engagement drawing back the trust of the general industry. And kind of maybe Kaspa will be the way to dispel a lot of the honestly earned negative conceptions that the world outside of crypto has towards crypto.
Yeah. I like that answer. Can I to finish out here, if it's cool, I want to ask you a couple of lightning round. You can just answer quickly, and then we'll wrap this thing up. You talked about this towards the very beginning, but I'm just really crypto is a weird place where someone who develops these things can become kind of like a celebrity. You get all this attention. A couple years ago, you might not have had the same attention. How does it feel to have that attention now?
It's stressful, but I think I'm navigating it well. I talk about it. I used to talk about it with my therapist, because everyone who is going through major changes should go see a therapist, because self-care is important. And yeah, I gained a lot of attention I didn't expect, negative and positive attention. One day I'll write a book about the the emotional aspects of being outstanding in the crypto crowd, because it's a very weird crowd. It contains some of the most compassionate and most toxic people I've ever seen. But it's stressful. Sometimes I just need a breather. Sometimes I will disappear for a week or two to just regain my composure. But all in all, I'm mostly proud of myself by how well I'm navigating this and finding myself handling situations I have no training and no mentoring in doing, and finding myself pleased by the way I handle them. So actually, with all the anxiety and fear of doing the wrong thing and ruining everything for everyone, which I constantly feel, and the imposter syndrome that every academic knows very well, I get a lot of affirmation that I'm able to navigate very complicated social and corporate landscapes, and it's actually very empowering.
I think probably anybody with some success somewhere struggles with imposter syndrome. And if you don't, I don't know. I don't know how to relate to that. But I will say, when I asked the question of like, what questions should I ask you on Twitter, and the community responded, there was lots of people who said, just let Shai know that we appreciate him and support him and all that stuff. That was really cool to see.
That's very touching.
I know you don't like win questions, but when you're not working on Kaspa 24/7, what do you like to do?
Well, first of all, I have a girlfriend and a cat, and I love them very much, and I like to hang out with them. I have friends that I love dearly, and I like to hang out with them. Shout out to Yoni and Inbal and Arik and Adar. Love you, and I miss you a lot. And I play guitar and I play piano. I go jam out with my friends. On jams, I try to play bass. And I play video games and I read books. I do normal people stuff.
What's a game you've enjoyed lately?
I was just in the middle of Prince of Persia: The Lost Crown, and I tried to beat it before I left for this journey, but I didn't manage to. And I'm a huge Metroidvania fan, actually, and I know I'm gonna. Yeah, I'm coming out a huge dork here, but I kind of fell into the Phoenix Wright series for a while, so I've been playing them a lot lately.
I love it. And you just mentioned your cat, which Nacho, is that right?
Nacho, Ignacio.
Ignacio. Lots of people ask, how old is Nacho?
About a year and a half.
Okay. And then what do you think about, KRC20s? There's going to be the Nacho theme meme coin. What do you think about that?
I love it. And I also love it that they aren't just cut and paste. I read their feed and they put thought into their content. They're cute and they're trying to be funny, and they're not just. There is love in this project, and it's love for my cat, which I love so much. So it resonates with me. So it's the only meme coin I follow. I'm not affiliated. I'm not gonna invest in it. I'm gonna get some, of course, like for my virtual vanity plate, but. I love the homage. I appreciate it. It makes me and Noah so happy.
I mean, I think even if you didn't buy any, people would probably send you some. And as an animal lover and stuff, a cat lover myself, I love to see stuff like that. So, very last question for you. Answer it any way you want. What's the last thing you want to leave listeners with?
The same thing I leave listeners with whenever I get this question. I love the community. Kaspa would not have been what it is without you. The amount of support you give to everything we do is insanely empowering. Without you, I would have given up on this a long time ago, but it's never really hard, because I know that so many people have my back, and I appreciate it to no end.
Well, Shai, thank you very much for taking the time. I know you have like a crazy schedule with the world tour and stuff, but you took the time to do this podcast, and I really appreciate it. It was super nice to meet you.
Thank you for having me. It was great. I enjoyed it very much.
Yes. Thank you very much. Thank you for everybody who listened. See you in the next one.